I would now go to Aditya. You can ask your question now.
Okay, so I have a question. Sorry, I joined a bit late, and unless I missed it. So, is there any minimum amount that we would need to say deposit, or is it a case of where we can start with any amount, Raminder? Unless you've already explained it because I wasn't there initially. That's the reason.
No problem, and I can explain it again. I hope I'm audible.
Yes, you are.
Oh, yes, you're audible. Thank you.
Yeah. So, I mean, with the crypto, you would basically start with the app first. And with the app, you have to stake a certain amount for the card, and in order to enable the earn feature. So, the minimum that you will have to invest is for the 2% card, which is a 1,000 CRO. 1,000 CRO multiplied by 22 cents Canadian would be around maybe $220 in Canadian. So, that's what you probably need to invest from the start. And then right now, because when I joined Crypto.com, the card currency was known as MCO, which is their in-house Monaco currency that existed from 2017. So when I joined in late December 2019, I had to join with 50 MCO. 50 MCO at that point in time was approximately around 5 Canadian. So again, that was around $250. Then when the market dipped, and you would have all seen that the Bitcoin price dipping from the high 12,000 Canadian all the way up to 4 or 5,000 Canadian. That's where, because Bitcoin is more like the 66% of the entire market portfolio, every other altcoin dropped at the same point in time. And I kind of still remember the date. It was March 11, 2020, the date that I cannot forget because I missed to time the market at that point in time. So but the good thing that I did was around the same period of time, I upgraded my card from the 2% card to the 3% card, and I ended up buying 500 MCO for both me and my spouse. That 500 MCO at 5 Canadian was $2,500. The value of MCO since grew to approximately I would say 7.5 to 8 Canadian dollars. So it was more like 1.5 times of what I had originally invested. But in doing so, I also enabled certain other features of Crypto.com, like the 2% extra earn. So with stablecoins, with a 1,000 CRO, you can only earn up to 10% annual interest on whatever stablecoins you put in the app. But with the next year, you can get plus 2%, which is 12%. And if you go to the next year, which is 100,000 CRO, that will add another 2%. So it all depends upon the amount of stake that you want to put in the app, because CRO is a centralized currency. It's controlled by one company. So you always take it with a pinch of caution. I would say that for starting investors, you're good with the Ruby card, which is a 2% card, and you go ahead and invest 1,000 CRO in there, which is an approximate investment of 220 Canadian. Once you do that, you will have unlocked the earn feature, which allows you to invest CAD currency or USD currency at 10% per annum. And the good part about it is you get the interest payments on a weekly basis, which means that if you invest, say, on a Tuesday, the next interest payment will happen on the Tuesday of the next week. And it's prorated. So you won't see 10% coming back on the next Tuesday. It's 10% on an annual basis divided by 365 days multiplied by 7 days. So you get that amount of interest on a weekly basis. If that helps to answer your question.
Oh, yes, it does, Raminder. So one more question is, what would be the risk to reward ratio in terms of, say, when we invest certain amount? I know you already mentioned that this is a certain amount which we are ready to lose. But I know being a human, right, we don't want to lose money. We always want to make money. So if, say, we are investing a certain amount, in this case, say 250 Canadian, so like what is the risk of losing it to the reward of, say, earning that 10 or 20% over a period of time?
So I would say 250 Canadian is more like, if you are investing in crypto, $1,000 to $5,000 should be throwaway money, which means that you should be mentally prepared to lose that amount of money if something happens. And $250 I think is easily recoverable. If you compare it to a credit card fees right now, it's like compared to 2 annual fees of 2 credit cards of $120 each, right? So the only risk that you have is Crypto.com going bankrupt one fine day, and then taking away all of the money with it. Of course, it will hurt the investors which are at 4% or 5% cards and have higher stakes. But then for a smaller investor, your lower loss is around 220 Canadian at that point in time that you've invested, plus any amounts that you have invested as part of the earn feature. If I look at Crypto.com, and I've been following their WhatsApp groups, again, a disclaimer that I'm not an employee with them. I'm just an investor that have been investing with this particular exchange. And I would have similar views for Newton and ShakePay as well. But if I look at the kind of way they are managing their Telegram apps, it's vastly different from the kind of scam Telegram groups that you see otherwise, where everybody says that I'm doing great, I'm having fun, I made so much money on a particular day. With Crypto.com Telegram groups, it's very, very well managed. You always are given certain inputs which are links to certain blogs from Crypto.com. They also have certain insurances in case their exchange is hacked. So there is coverage for that as well. To what extent is that coverage enough? I have no clue about, but that's a risk that I'm willing to take in.
Okay, thanks for this, Raminder. Thank you.
Yep.
And that was wonderful. Thanks for sharing in detail. Anyone else on the call has any questions? If not, then I
would have loved to show the features of the app, but you are welcome to explore on your own as well. I'm not sure how screen sharing works on a mobile app, so I don't know if that will work or not.
Possibly we could have a session with you, Raminder and Samir, once again later with the detailed explanation of the apps.
Yeah, sure. Why not?
Because somehow current crypto was definitely out of my radar, but today's session has kindled some desire to learn more.
Yeah, absolutely. From knowing the growth that has crypto been, at least this year after the market crash, it's definitely something that we should be looking at.
Yes, the volatility which Samir mentioned, which Raminder mentioned, were really worth looking into it.
You've woken the sleeper devil in us.
Absolutely, and I do understand. Amongst the different people on the group, I am probably the most risk-averse person that you can ever find. I would probably never trade. I always like to buy and hold for the maximum amount of possible. And the reason is twofold. I don't want capital gains unless it's absolutely necessary. So my preference would always be stable coins and Bitcoin and Ethereum. I don't personally venture into many of the altcoins because I know that these currencies will continue to exist. At least Bitcoin and Ethereum will continue to exist given the amount of market capitalization they've already been. So short-term dips 10-20%, as long as you're hodling them, it shouldn't matter. So I'm the most risk-averse kind of person who would rather hodl onto these coins and keep deferring capital gains as much as possible until the day I actually need it.
So, Raminder, I've got another question. So, say suppose we deposit a certain amount based on, say, the fluctuation of the market, say once, say either Ethereum or Bitcoin goes in and up, does the amount of money that we hold change as well? Or is it like just depositing in a bank and nothing changes?
Yeah, absolutely. So it will show you the USD value or the CAD value depending on what currency you have chosen on the app. So I like to keep things simple. I like to keep it as CAD as the currency. It helps me identify what is the amount I have invested and what I have earned so far. But to answer your question, when the value of Bitcoin drops, yes, you will see the amount decreasing. When the value of Bitcoin rises, you will see the amount increasing as well. Where I look at these drops and highs, I just tend to ignore them because I know the value of Bitcoin is limited. There are only 21 million Bitcoins in the entire world, out of which 87% is already circulating in the market, and the remaining 13% is very difficult to mine. So when you have a finite currency as against fiat, you can keep printing up as many dollars as you want. But when you have a finite asset, rarity breeds value. That's what I believe in. So if the amount of Bitcoin is limited, the value is only supposed to go up unless all the governments around the world come up with bans saying that Bitcoin will never be accepted as a currency, and they collectively decide to destroy the currency altogether. I don't see the value of Bitcoin ever falling. It will only continue to rise. It will be a steady growth. It will not be like a straight jump, but I would definitely see like 20 years down the line, I would see the value of Bitcoin rising as high as $50,000. That's what I feel, because the value is there is only 21 million Bitcoins all over the world.
Thanks for that, Raminder. So is it a case of the other cryptos as well? Because some of them say, like, for example, while reading the news, we said, okay, Ethereum recently has gone up to say 300 or 400, and then XRP might rise in the next few years. So does everything work on the way Bitcoin works, or are everything different wherein individually they grow or come down?
So I think my friend who was talking before me has better knowledge about altcoins. I am personally the kind of investor that would always invest in the two most well-known currencies, which is BTC and Ethereum. But I know for a fact that Ethereum as one of the altcoins is perhaps the strongest coin as of date, because of the blockchain being utilized by multiple companies around the world. It has a lot of other usage as well, rather than using it as a coin. The blockchain itself is being utilized for multiple other users. So you'll again have to go into the white papers of where the Ethereum blockchain is used and for what purpose. But as long as the utility stays, as long as you see the intrinsic value, that's just like you look in the share market, you see the intrinsic value of a company. Much like in crypto, as long as the intrinsic value of the blockchain has a widespread usage and a widespread utility, that's where that particular coin will see the market highs in the years to come. And people have caught on to the fact that Ethereum, the blockchain of Ethereum has widespread utility across many industries. That's where you are seeing that hype. Some of it is obviously inflation. People see that the value of the coin is pumping, so they tend to follow along, as my friend earlier told. But the intrinsic value always stays the same. So if you look at value investing, the Warren Buffett style, value investing is always looking at the intrinsic value of an asset, and always investing in that. That's where I feel the value of BTC and ETH will always see that intrinsic value. For the others, I'm yet to learn. I'm also as novice. I'm still learning in the crypto market. So I'd definitely like to learn about some of the other altcoins that was mentioned on this chat, like the VeChain that was mentioned. Link is another one that I keep on hearing. So those other altcoins, if we can come up with other sessions, if people have knowledge about them, I will personally like to benefit from that knowledge as well.
So as you said, like Link and Ethereum. So basically, Ethereum is not just the way they have intrinsic value is that they're not just a coin. It's a network, and on Ethereum network, there are so many other currencies that are operating, like Chainlink, VeChain. All of them are operating on Ethereum network. So as long as the new currencies coming up and the new projects coming up on the Ethereum blockchain, Ethereum is there to stay. It has like really good real world use cases. So yeah, Ethereum is like one of the better altcoins out there.
And so may I ask, what's the difference between Ethereum and Ethereum Classic? Because I constantly see these two coins coming in.
Well, to be honest,
which one is better?
To be honest, I don't know. I haven't heard much about Ethereum Classic, but Ethereum is definitely better because, like as I said, they have the network ERC20 on which even the tether is based on ERC20. Chainlink based on ERC20. Like they have so many real world use cases like smart contracts, stake of proof, stake of payment. So many things going on there. So definitely, in my opinion, Ethereum is better. And Ethereum Classic, I haven't heard too much, but I have heard that it is failing. I don't know, like what's wrong with their like source code or something, but when you look at the Ethereum Classic analysis, so many of the analysts say that it might fail in the future. I don't know the exact reason because I haven't researched enough on Ethereum Classic, so I can't comment on that, but that's what I've heard like from different analysts. Once again, there are so many coins that like it's a huge rabbit hole. There are like hundreds of coins, so it's almost impossible to keep up with all of them.
Absolutely. And I feel, that's the issue, because every other person seems to come up with their own coin. It becomes very hard to differentiate that which coin really has intrinsic value, which coin doesn't have. And it's just come for the sake of it.
Exactly. Yeah. Absolutely.
Yeah, and absolutely, because of so many markets and so many coins, there's a whole lot of overwhelming information that a new beginner would like to understand. So my next question is, which applies for both Binance and Crypto.com, that both these platforms, I see that they have multiple markets. So each market has multiple pairs. So as a beginner, if someone wants to understand which of these as a market and pair to start trading, any recommendations from you both on Binance and Crypto.com?
Yeah, I would say for the sake of simplicity, obviously it's USDT, the Tether, because you can always see compared its value to the US dollar. So that would be the most simple. Or also BTC, because BTC is the biggest currency, and many of the altcoins are not traded against USDT. They're only traded against BTC. So that's the second option. But for the sake of simplicity, I would say USDT.
I would agree as well, and I'd like to throw a second perspective. When you trade with any other altcoins, you will have to understand tax consequences as well.
Exactly.
When you are even trading with BTC, you will have to convert the value of BTC into maybe USD, and then convert the value of USD into Canadian, and then you will have to understand what the amount of coin you are buying in the target currency, and then convert that to Canadian as well. So it will be a nightmare when you are at tax time and you have to understand how many trades that you've done and whether you have gained or you have lost in the entire process. So again, I'll side with Vivek. I think I would personally want to always do with USD. If given a chance, I would rather do with CAD, but CAD does not have liquidity in the market. So it's always, you'll have to stick with USDT and then convert it to Canadian.
Yeah, thanks both of you. So what I understand is your recommendation would be to trade with USDT market. You're using either of the platforms to begin with, at least. And
Yep.
now that makes me to second question. Once you trade, I have come across some of the videos where they say that once you're done with the trade, you should move your assets to wallets. Is it mandatory for these platforms as well, or what are your views on that?
I would say it's not practical at all, especially if you're trading like every day, 3 times a day or 2 times a day. It is not practical, because to move your money out of the exchange to the wallet, they charge you fees. You have to pay the network fees, which could be like anywhere from $5 to $15, $20, $30. So I would say it's not practical for me. And once again, it comes with a risk that the exchange might get hacked someday. But then, like, once again, it's you got to balance the risk and convenience, because if you move your money out of the exchange, the first thing is you got to pay fees, and then some of the coin transfers can take sometime like 24 hours even. So it's not very practical as far as I'm concerned, but I do understand where they're coming from, because like from a security standpoint, it is much better to keep them off exchange rather than on exchange. But like many of these exchanges like Binance, they do a lot of work on their security. So they hold a certain percentage of all the holdings offline. So they do a lot of work there. But yeah, in the past they have been hacked. So there's always that risk.
Yeah, but the good part about Binance is even though they were hacked, they were able to return their investor funds. So in that respect, I would say they're better off.
Yeah, exactly.
With regards to Crypto.com, I'd like to add they've probably never been hacked so far. So, but I feel their security, as per, if I join their AMAs are basically their conferences that they hold on a bi-weekly basis. So they constantly talk about security aspect over there. So I feel the security must be tight. But again, there have been no instances where I could actually vouch for it. To be frank, the other part that I wanted to talk about putting funds on the exchange, you always have the leverage of putting funds on the exchange and the convenience, but the added point about Crypto.com is the stake and earn feature. So if you click on that and you click on, okay, just go to stake and earn. So while you do that, depending upon the amount of funds in different coins that you have, you also earn a very small percentage of interest while the funds are lying idle in the exchange. So as an example, if you have CRO, your CRO on the lying idle in the exchange, if you click on soft staking on the side, just click on soft staking on the bar. Right. So over here, you earn daily interest. On Bitcoin, you earn up to 0.75% interest. This is very small because your funds are lying idle on the exchange. If these funds were in the app, you would earn like 6% on a daily basis if you just hold them and do nothing with it. Then Ethereum is 1%. Tether is 4%, which is closely following your interest rate at Indian banks, if I would like to put it that way. So that's a good part. Your USD coin is another coin earning 4%. If you scroll down further, you can see Crypto.com earning 5%. So CRO can earn up to 16 to 18% on the app. And on the exchange, if you stake it, you immediately earn 20%. But that funds are locked for basically 6 months. So if there is any volatility in the market, you end up making a good amount of money or you end up losing a good amount of money. But so far, touch wood, I mean, I've been with them right from January, and it's always on the upward trajectory, and it's not very volatile as well. It's following a straight upward pattern from there, much because of their syndicate events and much because of the kind of the coverage that they're giving with regards to the utility of the CRO. With any kind of coin, I would feel that the utility is the most important. If you have the utility and you have the intrinsic value, if the coins are being used to purchase something of value, the value of the coin should increase in the near future. So you get the earning on the exchange, you get the earning on the app, and you get different markets also over here. It's a very small, it's a smaller platform, not very small. I would say it's a smaller platform than Binance, because Binance gives you other features, but you also have the ability to put in market orders and limit orders over here on the exchange. So if you click on exchange, on the top right and left hand corner, you have the ability to put in a limit or a market order down below.
Yeah.
So you have that small feature, but obviously they don't have too many features like Binance. You cannot put in extraordinary limit orders. You cannot put in a follow limit order. You cannot put in a stop loss. So those things you can't do, but you can do a basic limit and a market order here.
This is awesome. Thanks. So
if anyone wants to, I mean, I'll post the link after this call on your group. Kamal, if you are okay with that, if anyone wants to join, they can join in. And if anyone wants to understand certain features, I'll be happy to help them out in my free time.
Yeah, that would be really great. Thanks for that. Now coming to my next question on that specific to Binance, as Samit mentioned, it supports leverage. So Samit, would you like to share some light on leverage trading with Binance?
Yeah, so if you see here, who's that? Is it Raminder? Raminder, can you go to the BTC? Here is select BTC markets.
Okay.
Yeah, BTC. Yeah, here. So you see these signs, right? 10x, 5x. Mm-hmm. So this is the leverage that is available on that coin. So for example, if you trade Ethereum against Bitcoin, you can get 10x leverage. if you trade OMG against BTC, you get 5x leverage. So what that essentially means is basically you can put $100 and you can trade with $1,000.
Okay, and it has three options: limit buy, market buy, and stop limit buy.
It has more. If you click on stop limit, it also has OCO, which means you can put take profit and stop loss at the same time.
Oh, that's awesome. So what's the difference between stop limit and OCO?
So stop limit is basically until price reaches a specific point, then it places a limit order. It's very similar to normal limit order, except that it waits for the price to go to a certain level, and then it places the limit order. Whereas OCO is basically it is take profit and stop loss at the same time. So it stands for one cancels the other. So if your take profit target, if you get to take profit target before, that order will be activated. If you get to your stop loss price before, then that order will be activated. So it's going to place basically two orders at the same time.
That's awesome.
Something like a bracket order.
To be honest, I'm not sure what exactly that is, but
one cancels the other is very clear.
Okay.
Yeah. Thanks. So there's also one additional thing which I see over here is something
Cross and isolated.
Cross and isolated.
So basically, if you do cross leverage, what happens is, let's say price goes against you, right? So, but for the position to be liquidated, it will look across all your wallets. Like, let's say if you have to make it simple, let's say you have USDT and Bitcoin wallet, and you have USDT and Ethereum wallet, and both have $100. If you're trading with the cross leverage, it's not going to ask you to liquidate your positions unless your total loss is equal to all the wallets combined, Ethereum and Bitcoin wallets combined.
Okay.
I'm not sure if I'm making myself clear, but as compared to isolated, where if your total loss gets to the value of just that one wallet, like let's say just that Ethereum and US dollar wallet, then it's gonna liquidate your position. As compared to cross, where your whole value of all the wallets combined is gonna be the value against which you would be trading. I think I'm not making it clear, so let me think about it. Let me think about a simple example.
So if I understand, you're saying that your isolated applies to one specific wallet and cross is
exactly crosses across all wallets.
All the wallets.
Yeah.
Yep, that's clear.
One simple example, real quick again. So if it's isolated, and let's say you have $100 in your wallet, and your loss reaches $100, your position will be liquidated to cover that loss. But if it is cross margin, then let's say you have 3 wallets and all of them have $100 each. And if on that one particular trade, your loss reaches $100, your position would not be liquidated until your loss is equal to the value of all your wallets combined.
Right. Thanks for clarifying that. And what's the difference in just having with spot?
Okay, and?
Just trading with spot.
Spot is like just usual, like your whatever cash you have, like whatever currency you have in the wallet, like actual wallet, you can trade at the market prices without leverage. Right.
So anyone else here has any questions regarding to leverage we can cover before going to next?
I think, Kamal, this is Aditya. If we can have another session completely on this, wherein they can explain with a few examples, I think that would help us. Maybe not in the session though, but sometime in future only dedicated to crypto, if that makes sense to everyone, if that's okay.
Yep, sure. If Samid and Raminder are okay, we can have a demo session wherein they can show
absolutely.
Step by step, right from adding funds to your Crypto.com or Binance account and then doing a sample trade with leverage, without leverage. If either of you are comfortable, we can plan for that kind of a session, which I think can help.
I wouldn't be comfortable doing a trade with leverage for demonstration purposes, but we can do like a spot trade.
Yep.
Because
Whatever
leverage can go against you really fast, even if it's a small amount.
Yeah, we would take like a demo of doing. We would not execute the trade as such.
Okay, yeah, absolutely.
Just a walkthrough of the steps so that it's easy to understand for someone who wants to begin.
Absolutely, yeah.
Though people can still explore, if someone is showing it, it becomes like a no-brainer to just follow it, right?
Exactly.
Okay, that's wonderful. I have learned a lot, and I think people on call are.
I had a question. I'm sorry, could I get the name of the person who was speaking before me?
Samir.
Hi, Samir.
Yeah.
So, Samir, personally, I have a question. Maybe if you can put it in the next session or whenever you're free. I'd like to know how are you tracking our taxes as you go along, because that's a pain in the ass, especially when you are trying to do multiple currencies one against the other. So, is there any particular app, any kind of platform that you're using to track it?
I'm just using a spreadsheet, which has very basic spreadsheet, which has which pair was it, how much gain or how much loss was it, and at the end of the year, I'll get the values on the date of the trades, like how much was the Bitcoin value on that date. And so I'm keeping a simple spreadsheet because I haven't found an app that helps you to do this easily.
Got it. I heard about a few apps like Coinly and CoinMarket.io. I'm not too sure. I haven't personally used them, but I'll explore upon it because the thing becomes complex. When you're just trading, you are simply trading. Trading becomes complex when you have to convert into USD and then further into Canadian.
Exactly.
And then when it becomes more complicated, if you have to combine it with interest, combine it with staking interest, combine it with cashback.
Exactly. So for now, I'm just keeping a simple spreadsheet. And from Binance, you can export all your history into a spreadsheet, and then from there, I'm keeping just like one central spreadsheet of all the trades, including Binance, Newton, Bittrex, whatever. So that's how I'm doing. Because as I said, I couldn't come across any good app so far.
So how about the balance that Binance.com or Crypto.com shows like this? Do they don't help over a period of time? Because I have created the sample accounts just for the session. That's why these are all zero. But I'm just curious to know whether over the period of time these doesn't have like your profit and loss kind of.
This is just a balance. Yeah.
Correct. So, go ahead, Samir.
Yeah, so this is just balance. You won't see how much profit you've made on each trade. For that, you would have to go to your trade history.
Mm-hmm.
So just adding on, I think what Crypto.com and what Binance or any other exchange would just give you a list of the trades that you've done on specific days. But then from that, you will have to capture what's the capital loss, what's the capital gain. If you're trading, then you will have to understand whether it's regular income or it's a regular loss. Then you have to factor in any kind of interest payments. Interest payments are not capital gain or capital loss. They're considered as regular income. Then you'll also have to factor in what kind of cashback you are generating out of any gift cards that you are buying, and what kind of staking interest or dividends you are receiving. So it opens up completely different chapters. So for a person who just wants to trade, it might be simple to a certain extent. But when you're unlocking many other features like earn, you're unlocking cashback. Cashback may be taxable in certain countries, may not be taxable in other countries. In Canada, I feel cashback is not taxable, but I'm still to get an opinion from someone on that. But in the meanwhile, it just helps to earn and put everything in regular income if you really have to put it.
Got it. Thanks. So if no one else has any question, I would go to next question, which is for Binance P2P trading. Maybe Samid, would you like
so
to?
Basically, these are the people that, like, for example, I think most of them are in Canada. So they are offering specific coins at a specific rate. The benefit is that you don't pay any fees. You can just simply send them e-transfer and they're going to send you over the coins, as compared to like trading it against another coin or buying it with a credit card. Because if you buy with a credit card, you got to pay 2.5% charge for Binance. So with this, the benefit is that you can avoid the fees, but the downside is that the person who's selling you the coin can charge you a different rate than what's in the open market.
Absolutely. What I have observed, though I have been tracking just a couple of weeks, that the rates that is put on this P2P trading by whoever is trying to buy or sell are way different than the real-time rates.
Yeah, exactly.
So,
So Samir, are these trustworthy?
Yeah,
people?
absolutely. They have
because
been,
you're buying from a person.
yeah, because to have because Binance would be your escrow. It would be like the middle person. And to do this, to be able to be eligible for this, you got to have like certain balances and stuff like that. You have to go through certain verifications, so it is pretty safe.
and what's your view about the rates that they put? Do you think, even though, let's say for someone who is trying to buy, he sees that the rate on P2P, a seller has put a higher rate compared to the real time, do you think it's still worth considering that it is minus the charges for doing your card to that coin conversion and all?
Yeah, so what I personally do, because I do see like sometimes their charges are a little bit, their rates are a little bit higher. So what I personally do is I buy USDT from Newton.
Mm-hmm.
And then from Newton, I send it over to Binance, because the good thing about Newton is that they don't charge you any fees for withdrawal. So you can send as many USDT from your Newton wallet to here, and then from there you can trade. So that's what I do, because you can see the rates are pretty all over the place, pretty much all over the place. 1.36, 1.28, 1.25.
Absolutely.
So I use Newton for that for now.
Mm-hmm. But for someone who, if in a case they want to use this feature, it's still okay to use in your
Yeah, absolutely. And I think like, especially if you're trading with small money, like let's say $100, $200, even $1,000, like this 1 cent, 2 cent difference isn't going to make much of a difference anyway. So it's perfectly fine to use if you want to use that.
Okay, cool. Thanks.
And you can also see like many of them have limit, like you got to buy a minimum this much of the currency. Like you can see 466, you got to buy a minimum 466. So that's also another thing to consider.
Right. I think if there are no questions, then maybe we'll plan for subsequent session. I'll coordinate with Samid and Raminder whenever they are free and they are comfortable. We'll plan for a session wherein they can show step by step for a beginner on how to start trading in cryptocurrencies.